Hey, welcome back to another episode of JBND Market Tips. We're sniffing out the market for some golden nuggets. It's been a while once again, but that's not because I was lazy, but because I simply didn't find anything with high conviction. So this past month, this past 2-3 weeks since last time I uploaded, we've got in the war with Iran, and markets have been choppy. They've dumped, they've pumped. It's been a huge mess. And I would scan the charts. I would look for different things to play on a short-term basis. Just nothing would pop up with high conviction. But things look better now, so that's why I'm making this video. Not just because indices are near all-time highs again and have pumped around 10% since the end of March. Well, that's not even really why. It's just the charts for our long-term positions are finally looking primed again to make another move, such as PayPal, Advanced Auto Parts, Generac, so and so. But yeah, let's just dig into the data. All right, let's start off with this. Okay, S&P 500 around geopolitical events since 1939. We went over this 1 or 2 videos ago, and here we are now. We might have overshot quite a bit, so maybe a pullback. I don't know. SPX put implied volatility has retraced, not at extreme lows, but has retraced a significant amount. SPY and PCE. Okay, the PCE has reset dramatically. Okay, so you can start looking for those hedges again, which is what I've been doing. 2 sessions ago, I started dabbling into some puts again for April 24th. Indices pumped again another 1 or so percent, so they're down a lot already, but just dabbling in slowly. Not only because of that, but I don't know if I talked about this in the last video. I mentioned I was waiting for the VIX to retest 18, 19, that $19 range to enter shorts again, because I didn't play the downside for March. I didn't play the downside. Why? Because everybody was already short. Everybody was hedging to the downside. Hence the violent move up since the start of the month in April. Okay, so if you go back to 2022, which was a bear market, which also started around with a different war, which was Ukraine and Russia. It was a very volatile period. Okay, and we practically entered bear market territory in the indices during that time. So you see here, we get these big spikes, okay, retraces to this $19, $18 range. In this case, it went down to 17, pump again, dump to 19, pump again, dump to 19, pump. Okay, you see the pattern, right? We just keep scrolling, and now we're here, okay? Now we're here. So yeah, so literally that's what I've been waiting for. I've been waiting for a month. I've been waiting for a month now. I finally got it, so I'm gonna start dialing into some puts. Why? Because I think this is honestly a sucker's rally. I think we are just sucking people in back into the Mag 7 trade, back into the software stocks, just to dump on them one more time. This is similar to what happened back in 2022, okay? And the reason why I think this is gonna happen is because I'm scrolling through Twitter, right? I'm scrolling through Twitter, and it's Mag 7 very cheap, Mag 7 very cheap, Mag 7 very cheap. This is like an all-time opportunity, a once-in-a-lifetime opportunity to buy the Mag 7. If you don't buy the Mag 7 right now, you're gonna miss out like all the other times. Things like that, right? So like everybody's just waiting. Everybody was just savoring that dip, ready to pounce on the dip for the Mag 7, right? And then boom, we pumped, right? The Mags has pumped, MAGS, a lot. You see, I tweeted about this on the 27th, maybe the 26th. I don't know. I said, I believe we get a suckers rally soon to suck all these people in back to the Mag 7 trade, just to dump on them again. Again, I think this is just a bear market rally. Bear market rally, okay? If you don't know what that is, basically, in bear markets, you get violent moves back up just to, you can either slam back down or just slowly move back down. Why? Because all the short interest, all the puts, when skew is elevated to the downside, it creates a lot of volatility when people have to cover. Hence, the value moves back up, and then we go back down. So it's very okay. That's what I think we're setting up for. Here you go. Now, yes, if Nasdaq breaks over 636, that would be another high. Whatever. Let's look at the S&P 500. Oh wow, reaching highs right here, very close. Okay. Either way, I'm sticking to my thesis. I think this is a sucker's rally. When would my opinion change? Or in what case would my opinion have been different? That would have been if we were dumping and dumping, and everybody was like, "Wow, Max 7 is done for. Max 7 sucks now. These Max 7 hate them. Max 7, I'm dumping. Max 7, no more, no more." When sentiment is like that, then I would have had a different opinion. But for so far, everybody's still waiting to buy the dip, and like it doesn't make sense to me. It doesn't make sense to me because they see these dips on the Max 7, right? And they're like, "Wow, once in a lifetime opportunity, whatever, whatever." Like, okay, like relax. Like, if you don't buy the dip right now, you're gonna get left behind, dude. Relax. Like, you really think this? I don't think, bro. Like, what? Literally a year ago, Google was at 140. On this dip, it went down to 270. And how is this an all-timer dip? I don't get it. Even Microsoft, it's the one that went down the most out of the Max 7, but it barely even reached the lows from last year, back in April of 2025. Like, these are not levels that you haven't seen in years, in decades. Like, what the hell? What are y'all talking about, man? I don't know what y'all talking about, bro. Like, I don't. How is this an all-timer dip? What? What? So again, I think this is a suckers rally. Now, software has come down much more since the start of the year. But here's the thing. Here's the thing with software. A lot of people are shorting it, but at the same time they're buying it, and everybody's been also buying the software dip. Oh, I'm buying Adobe. I'm buying Atlassian. I'm buying ServiceNow. I'm buying all these other software stocks, right? That's all I see, similar to the Max 7 thing. But at the same time, they're shorting. So I don't know what it's gonna do on the short term basis. It might even dedicate. It might go back to IGV, the software tech ETF might go back to 90s, but I think that would just be. I think this downtrend is going to persist for longer. But I am at the same time buying a software stock, me personally, and this is not financial advice, opinion only. I think this is a good opportunity. Speak to a financial advisor before you make any financial decisions. Okay, this is not a recommendation to buy any securities. Look, Blackline accounting software. Okay, I don't think accounting will be disrupted quite as easily if it even does get disrupted by AI. Why? Because it's heavily regulated. Companies are not gonna risk um, replacing their AI software with, I mean, their accounting software with AI and having ChatGPT or Gemini or whatever the hell take care of their accounting for the quarter. They're not gonna do that. One little mistake, that's very costly. That's very costly, not only for the stock price, but any fines they could give if they mess anything up, dude. You're not gonna like. That's I think that's like one of the very few things companies would not risk replacing with AI. Okay. So yeah, I'm buying this Blackline software name. Anyways, let's go back to the data. So we had the recent April Global Fund Manager Survey by Bank of America. Which what do we see here? Bonds, staples, discretionary. The top three most underweight by FMS investors. Okay. And what is this good for? If you're looking at it from a contrarian point of view, that is good for Estee Lauder. That is good for Canada Goose. That is good for Vans. That is good for PayPal. That is good for Etsy. That is good for Kraft Heinz. Okay. April rotation into cash, US dollar, telecom versus out of equities, Japan healthcare. Out of equities. I share this because you would think, oh, they sold equities, whatever. Let's buy the dip right away. But most people are gonna go ahead and buy the dip on the Max 7 on software stocks and popular names, right? The names that everybody else talks about. But I'm not sharing this for that. I'm sharing this for the other equities. Like our international, the ones that have international exposure, okay? Which again, Alibaba, Estee Lauder, Meituan, Canada Goose, Vans, PayPal, Generac, Etsy, Blackline, Kraft Heinz, Diageo, not BioCorp. Not all of these have international exposure. Let me clarify that, but most of them do. And since we last talked, I also took a new position in Diageo. Yeah. Here, let me just tell you here. So this was back at the end of March. I like the alcohol play. Okay, I was previously playing it through Brown Foreman, but not anymore after the potential merger news with this company. Not sure how to pronounce it. Per not a record. I don't think that sounds right. And then recently they had another merger rumor with a different company. Point is, I'm not interested in Brown Foreman anymore if they're gonna merge with another company. On the other hand, Diageo, no merger rumors or whatever. A lot of international exposure. You know what? And then it dumped this past year. So, and it's at a level where I've been waiting on it. So I've been looking at it since maybe 120s, 110s when I found out about it through Tom Hayes from Hedge Fund Tips. But I was just waiting for 80 or sub 80 and finally got it. Bought in at 74, 73. And yeah. I'm not going to go much deeper into that right now. But yes, people, I think this whole GLP-1 scare, people, Gen Z not drinking is overblown. I think it's hugely overblown, sorry. And before Brown Foreman, I was also playing it through Ambev, but closed that a while ago. And why? Because I wanted to raise some cash for upcoming volatility, which we got through the Iran war and all this stuff. Sheesh. Okay. Let's keep going. Fund managers overweight to equities drops to lowest since July, but this accounts for global equities, okay? So not just US. So global equity allocation dropped to net 13% overweight from 37, least overweight since July 2025. So not extremes, but it's a decent drop. And I think this is good for our Alibaba. FMS cash levels remain at 4.3, so cash levels are still low. Well, actually, no, that's a pretty big bounce since, what was it, December, January? But not super high, it's alright. Still on the low side, but yeah. Performance since October 29, semiconductor software, huge divergence. The K-shape in the stock market, the K-shape of Wall Street. Something from Yardini Research. U.S. EPS growth. Industry analysts are very optimistic about earnings growth this year, with their expectations of double-digit gains for all 4 quarters. They may be a bit too optimistic. You know what this reminds me of? This reminds me of beginning of the year or the end of 2025. We got analyst estimates of the S&P 500 price targets end of the year, and everybody was bullish. Nobody had a single price target negative, and then so far been underperforming. Reminds me of that. Equity positioning has historically been well correlated with earnings growth, but it is now in line with growth turning negative, contrasting with. Okay, so people here are going to think we'll get a bounce in equity positioning to catch up with consensus. And I think so far since whenever this was created, we have gotten that. But I do think instead we continue to get lower equity positioning and consensus actually comes down. Why? Because opinion follows trend. All right. And I might be wrong here, but like if you see big drops in equity positioning, to me it looks like EPS growth estimates, whatever consensus actually goes down, follows the positioning. But again, not worried. Why? Because we're not invested in the popular mainstream names. Nice podcast I recommend by Bank of America's Global Research Unlocked. They give thesis for the China, Brazil, and Argentina plays. This is for JP Morgan. Did they report already? I think they did. I'm not quite sure. Maybe not. Tuesday morning. No, yeah, they did. Whatever. I'm not gonna read it. It already happened. Man, Kraft Heinz, bro. I want to buy more stock, but I can't. I can't, but I don't want to. But I want to. I have some in the Roth RA, and maybe a month ago I bought in the money or at the money calls a year out, and so if those at time of expiry close in the money, I'll just convert them into shares, so I'll have more shares. But still, I feel like I should have even more. I feel like, how do I explain this? I think it's just like one of the safest place you could find at the moment for its current price. Sure, there are other places that you can find even more discounted, but like I feel like the name, the reputation of this company, the fact that it's a defensive play as well, just makes it so safe at these prices, I think, in my opinion. And it's like, bro, like people love mac and cheese. And they don't just have mac and cheese, they have other brands too. They have other foods too. Man, I feel like if it comes back down, I think I might buy a few more in the money calls. Why am I not just buying shares outright? Because I could buy more shares, but I would need to scale out of some PayPal, which I'm waiting for at 50, near 52. Anyways, April historically marks the transition in investor behavior, and we are seeing early signs of that shift. Tax-related relocation flows are beginning to fade, with the capital rotating toward forward-looking catalysts. Yeah, so around this time, mid-April, after tax day, start to see some better performance in the markets. Valuations of tech stocks have declined meaningfully. You've probably heard about that very often, but I have a note on that. I have one note I'd like to add on that. It's gonna take me a while to find that. So let me look over here. Listen up. Okay, right? So we have the free cash flow is better than earnings at reflecting heavy AI spending. The price to free cash flow ratio makes stocks look expensive. So you have the comparison here of 12-month price to free cash flow and 12-month price to earnings. The difference between free cash flow and earnings is particularly important now. Although earnings don't subtract right away for all of this AI spending, they do fully add the money that flows to companies on the receiving end of the spending. So for now, by mostly telling only the happy part of the story, earnings are left pulled up. Hence, the decent sized drop in forward PE compared to the price to free cash flow and the latest market pullback. And I got this from an article by Barron's. Yeah, okay. So again, let's repeat that one more time. Earnings don't subtract for all the AI spending. All right, they add the money that flows to companies on the receiving end of the spending. So they only tell the happy part, and that is why the PE came down much more than price to free cash flow on this recent earnings, on this recent market pullback from March. Anyways, okay, let's keep going. February home sellers cut prices at a record rate. Semis are eating software's lunch. And here's the thing. Everybody's thinking software reverses to catch up back with semis, but what if we get the complete opposite of that and we get semis reverse down to catch down to softwares? I'm keeping an eye on that. I want some bearish flow, but so far flow has been bullish, so I'm not getting in the way. Strait of Hormuz. Again, China is well hedged because they've diversified their energy, clean energy, wind, solar, Originally, a lot of people were afraid that China was going to take a big hit on the closure of the Strait of Hormuz, but honestly, they're well hedged. They're well hedged because unlike the United States of America, they actually use various forms of energy. Okay, largest outflow in the past 27 years in the QQQ, April 2nd. Oh, that's a few days ago. Okay, well we've gone quite far back. I don't want to go too much further because at that point the data kind of has less relevance to now. Let's see if there's anything that. Okay, yeah. Here's another note on China. Okay, so geopolitical headlines have put the spotlight on energy independence and supply chain resiliency. China's decades of investments in alternative energy infrastructure and self-sufficiency is paying dividends. Okay, so here's the percentage of global supply in key sectors. Yeah, okay. Hedge fund positioning in China versus other emerging markets. 8% for China, and emerging markets excluding China 40%. So hedge fund positioning is still very low in China. Still early. Just need the charts to set up again. But yeah, okay, that's all the data for now. Let me show you what I'm seeing on some technicals on some certain names. Okay, Diageo. Look, had this big support here, broke under, so far bouncing, trying to reclaim back over. I don't know how long this is gonna take. I don't know if it'll be sideways like this. Oh man, I moved it. Where was it? Right here. I don't know if it'll be sideways like this for a few years and then pump, or if it'll be a straight V, recurve V shape. Who knows? We'll see. Black line, short term, not looking that great. We'll see what happens. Advanced auto parts. Honestly, to me, I see a cup and handle. Let me hide all these Fibonacci's and these technicals. I mean, these indicators. You see this cup and handle here? You see that? Okay. Let's go to the weekly. You see it again? Because I see it. So that's what I see. But I don't see any flow, call flow on it. Doesn't really need it anyway, but I haven't played calls on it yet. Why? Because again, I was being very patient, waiting for the whole Iran stuff to settle down, or for headlines to see fewer headlines on the war, to see that the market starts moving on to the next topic. And finally, I think we're starting to see that, unless Israel does some stupid stuff out of anger because obviously they don't want a ceasefire. Whatever, I don't know. But now we got that curling shape. I think I can start playing calls here. You know what? I talked about Neo a while ago. Has a nice setup. I can't remember if I got filled on some calls. Did I get filled on calls? Shoot, I don't think I did. I don't think I did. God damn it. But do you see the setup on Neo? Looks really, really good. Okay, this is gonna retest over here, and the next time we retest 7.7, it's going to break out. So, and setup is curling. It's really nice. Has an uptrend. Trying to get in on that soon. For a trade, not long-term position. Vance Corp. Let me turn off the indicators. Show you this trend line right here. It's been respecting this trend line. When it was down here, I was considering calls, but didn't take them. Why? Because I just wasn't sure if it was going to bounce or not. Man, I haven't played calls on Vance yet. Since I bought in March of last year, average down in April. I haven't played a single call yet on this stock. Eventually I will. When the time is right. Etsy, it's consolidating here at the low end of this wick-off accumulation. Looks really good. Had some call flow last week. Haven't played calls on it recently since what? Since end of February. Because, look, it's just, like, I feel confident that the price will hold above this 48 range and bounce around here, but it's like I can't get a clear picture on the even shorter frame where I know, oh, okay, I think this is gonna go up within a few days, right? So just watching it, I might have a better read on it, maybe above this price. What is it? 57, 58, maybe above 58, or at 60. I'll have a better picture, and then I'll play some calls. But right now, just being patient. Don't have to force it. Biotes, bounce. It's crazy stock. Eventually, it'll work out, I think. Generac, so had this cup and handle breakout, retested, bouncing again, had some call flow again 2 weeks ago. Haven't played it. Why? Because it was around the whole Iran situation, and I just didn't want to rush things, especially after getting bagged in Alibaba calls. So yeah, just letting it do its thing. It looks like it wants to start trending up. So that's that. Again, so look, Generac, Etsy, Vans, Advanced Auto Parts. Those four, I feel confident. To me, at least, they look like they want to trend up. And they look like they will, unless there is a big negative event. But if there's not, then these look solid. These four look solid to trend up. PayPal as well. You see that. Canada Goose. Looks like it's just consolidating here. I was waiting for just a little bit lower, just like under 1020 to add a few more shares or in the money calls and then play a bounce. Because honestly, from here, I just see this. I don't see any more sideways action. I think it's getting ready to moon. It's getting ready to rip. Okay? Do you see this? Do you need me to zoom out? You see this, right? It's honestly so beautiful. I mistimed it. What was it? Back in August, I thought this dip was this dip. So I thought from here, it just ripped. So I have some calls expiring in 3 days that I added back in August for like $17, $18, $20 that are going to expire worthless. Whatever. It is what it is. Yeah, so I'm waiting for under 1020 to buy more shares, more calls. That, or start to see more flow hit the tape. Call flow, which I haven't seen yet. Or maybe go back, reclaim $12 and then consider some short-term calls. SD Lauder, I tried playing calls here at 79, 78 when the original Puig merger news came out. Then it dumped another like 10% the day following, so got bagged in those. They're like $100 calls for June, I think. trying to get out of those at break even. Don't know if it'll happen. The depends on how much this will bounce. Alibaba need 131 to reclaim and push over. Originally wanted it to not even dip below 131 and just bounce from here. That wasn't the case. Need over here and then pump, whatever. Don't know how long that's gonna take. Kraft Heinz. Oh, okay, I didn't notice Kraft Heinz pulled back this much. Come back under 22. Come back to 21.50, and I'll buy some more in the money calls. Dude, everybody loves ketchup. If you don't love ketchup, you like ranch. If you don't like ranch, you like relish. Nah, right? But or mustard, dude. It's just so much stuff, bro. There's so much stuff. I really like Kraft Heinz. So yeah, that's what I see on a technical basis for the short term on these stocks. Long term, okay, let's look at the quarterly because the quarter finished and I haven't. Okay, so not whatever. I guess you can make an argument for Etsy quarterly to be a doji candle reversal, and you can see back over 65 by the end of this quarter. Bio. Yeah, the quarterly candles are not that crazy. Nothing super bullish. What about the monthly candles? Monthly for March. I guess PayPal, that tiny doji. I guess a doji for 18 monthly as well. Kind of not the best though. Yeah. Whatever. I saw some call flow for China Tech for this PDD. Some crazy $130 calls for July. Some 104 calls for end of this week. Some like 115 calls for May. Crazy. So I had to play some. I added some of those May and this week expiry calls. We'll see what happens. Maybe there's some news that's gonna come out. Don't know what. Alibaba 2, whatever. Nasdaq. Man, I that's violent. That's very violent. But I think we go back down. Albemarle. Some crazy call flow for September 280. Yeah, so far you see that, right? But I also added some next week $200 calls. I think I also added some May calls. I can't remember. I might have, or I might have not. Sentinel 1 playing some 12.5 calls for this week expiry. Some Lottos, I'm already up double. Don't really see where this goes from now. Don't really see where this goes from here, but maybe somebody knows something and we get some news. Estee Lauder went over that already. PayPal went over that already. I'm still in that yen carry trader. I'm still trying to play the reverse carry trade. Hasn't really done much. Sideways, whatever. Disappointing. I think it's still going to happen. It's just a matter of when. K-Web played some calls that I added back at the end of February. Trying to get out of those at break even. They expire in June or July. I think June. For 33. Just pump it up, please. Let me get out. Man, what a... I really tried playing the China pump in the February, beginning of March, and it was just a disaster. But yeah, guys, I guess that's it. Thank you for watching. Hopefully the market gets more interesting, and I'll be able to provide some good videos, some good data. Because again, I don't want to make videos when the market's boring, when there's nothing really to share that's valuable. Just gonna keep an eye on these current swings. These are just trades. Again, nothing here is financial advice. Should not be considered as financial advice. Talk to a financial advisor, financial professional before making any financial decisions. My investment and trading strategy fits different to yours, to everybody else's. Everybody else has different objectives, goals that they should consult with the financial advisor with before making any decisions. Okay. Here at jbandd's Market Sniffs, jbnd is not responsible for any losses, any decisions you make from any information shared here, because it is only for informational and educational purposes. And again, opinion only. All right, see you guys.